Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi guys, welcome back to Bazaar Corporate Radar. The market is looking good. Don't be fooled by the headline index. It's absolutely flat, but there's so much action beneath the surface right now and lots of stocks are picking up. After the big move that came in from Dabur yesterday, all eyes will be on Emami today and whether they can have a strong showing as well. Our resident expert Mangalam is here to tell us what to expect from Emami's numbers. You think another set of fireworks, or are we expecting too much?
We might not be expecting too much if we expect fireworks, because a good set is expected for Emami this quarter as well, and that's primarily because the base was pedestrian, and I use this word carefully because the base quarter net profit was just 1 crore rupees and they had a volume decline of 18%. So on the back of such a base, you're expected to see a good set of numbers. So revenue growth of about 18% is what our poll is throwing up for Emami this quarter. EBITDA on account of higher operating leverage likely to grow by about 62%. Margins on the back of a low base expected to expand by about 500 basis points, closer to that 20% mark. Net profit, just watch out for that 56 crore mark. Do not look at it in terms of year-on-year growth, because that would be whopping 56 crore as compared to 1 crore itself. On the back of that base, the domestic volume seen anywhere between 15 to 18%, would not be out of realm of possibility to expect something like a 20% as well. A couple of brokerages are factoring that in. For Emami, the important part will be to watch out for individual brands. Summer season had a few thunderstorms, so maybe a couple of their summer products might not have done well. How is Kesh King shaping up will be important, and the recovery in their international business, which accounts for 10 to 15% of their revenues.
Okay, I was actually waiting to use the word pedestrian for Exide when I asked Sonia. But before that, would you want to tell us about Pidilite as well?
Well, Pidilite, Lata, the stock is at a record high ahead of numbers. It's up 40% over the last 1 year itself. Not much valuation comfort, but results are expected to be good again on the back of a low base. And secondly, the improved efforts that the company is taking on their monsoon-related waterproofing products. So first quarter has that seasonal advantage as well. We're looking at a revenue growth of about 18% for Pidilite, and the margins are likely to improve by about 20 basis points. EBITDA growth of about 19.5%. Most of this will come on account of top-line growth. The input costs have increased, so maybe the gross margins might decline a little bit. Net profit growth on the back of that expected to be around 16.5%. For Pidilite as well, important to see what kind of volumes they throw up, and this time the street is working with 18 to 20% out there. Why is that? Because the base for Pidilite, again, negative 0.1% is what we're going with in terms of base for Q1 FY18. In terms of management commentary, definitely watch out for what they have to say in terms of input costs and how the rupee weakness is affecting them, and competition too. Astral Poly's adhesives business did well as they reported their results yesterday.
Oh, yeah. Okay. Sometime later in the day, we'll come back for Tata Global as well to you, Mangalam. But for the moment, yes, pedestrian reminds me of Exide. Will it be exciting?
It'll be exciting, far from pedestrian really. The numbers will look quite good this time around. In fact, after last quarter's strong performance, it allayed a lot of investor concerns with respect to the margins, and the stock is now at a 52-week high. So it's come a long way since then, but the expectation is this quarter will also be good. A revenue growth of 22% is what we're penciling in. The demand momentum remains strong in the automotive segment, double-digit growth there. Inverter demand has picked up this quarter, so that will aid battery makers like Exide. The industrial segment, they've seen market share gains, especially in the telecom vertical and gains in the UPS segment as well. LME-led prices are actually down quarter on quarter, so that will aid Exide's margins on a quarter-on-quarter basis. But it's been excited so far, so I don't know how much more excitement post-numbers.
Fair enough. Actually, the result season itself has been. At the moment, the markets are continuing to hold most of their gains. It's but 2:1. We were 2.5 stocks in the green. We're 2:1. I mean, I'm not complaining too much, but nevertheless, it's just about 10-20 points higher on the Sensex and the Nifty at this point in time. I mean, if you run hard for 4 days in a row, this is as good as it gets. It's the oil refiners that are doing very well, and so in that light, let's get to another allied stock, Castrol. We should be getting to analyze the Castrol numbers in just a bit with the management. The revenue was up 17% and EBITDA did better. because margins improved about 70 basis points to 24.7. So you had an EBITDA growth of 21% and a net growth of about 20%, 19%. So fairly decent growth coming in from Castrol. And we are being joined by the management. Joining us is Rashmi Joshi. The CFO and whole-time director at Castrol India. Good morning, Rashmi. Thank you very much for joining us. Well, first up, can you tell us whether this kind of a volume growth is maintainable or are prices coming in the way? It's a fairly decent 52 million litres that you have posted. Maintainable volume growth?
So as you know, for past 2 years, we have been making a lot of effort to drive volume growth, and we have been balancing margin growth and volume growth in a way that the profitability is maximized. So we will continue to have the same focus going forward as well. I mean, we do look at pricing premiums in the market before we take any pricing action. So it's a fine balance to achieve, but we usually do that. So you know, the teams are aware of the impact of prices on certain brands, and they take care of it.
You need to give us the volume for the current quarter. That 52 million litres was last quarter's. What did you all do in the quarter under review?
It's 57 million litres.
Okay.
It's 57 million litres.
All right, so 57 million litres compares to 52 million litres last quarter. That's a very strong growth. In fact, it's the highest that we've seen in a very long time. Can you break that up for us between automotive and industrial lubricants? What was the split up there, and where do you see the big trigger coming from?
So a large part of the growth has come from automotive and again in the retail part of our business, and we have grown much faster than market. So I don't know what number you have, 52, but the volume growth for the quarter is 12% year on year, because versus last year we are seeing significant growth this year.
Okay.
And over last 10 quarters we have actually consistently grown volumes on an year-on-year basis. So good trajectory due to all the effort that is being made. And the economy is doing well. That has reflected in our commercial vehicle oils volume very well. Apart from that, we've also launched new products in that category. So as you know, commercial vehicle oils constitute a significant portion of our portfolio, and we are consciously driving volume growth there also. We introduced Castrol Spherol in last 2 quarters, and that is doing extremely well. We introduced, over 9 months, we launched quite a few new variants of the products, and they have been doing extremely well. In fact, almost 80% of our volume growth is actually coming from those new variants. So almost 50% of the products have been relaunched with better technology, and you know, they're more future-ready products.
Okay, no, Rashmi, 12% is what we flashed actually, because a year ago we have that bar chart of your volume. The comparable quarter was 51 million tons, so 57 is 12% higher. What were the realizations like? Could you do even better than the 180 rupees per litre that you clocked last quarter?
So yes, in terms of realization, we have I've compared with last year. What I would say is, in terms of gross profit per litre, we've been able to improve gross profit per litre by ₹1, despite an increase in base oil prices over last year. There was $100 base oil price increase over last year, same quarter. So we've been able to recover all that and put in pricing actions or improve mix in addition to pricing actions, in a way that the cost of goods impact is mitigated and we're still holding on to the margins.
You did 171.
And again, as I said,
year ago you did 171 rupees. You would have done 172. Year ago, the realizations per litre was 171.
No, so cost of goods, I think we did 178. Cost of goods went up by about 6 rupees or something. So we had to recover that, and the mix also improved. So considering all that, the net margin is improved.
Okay. Any price hikes that you will take for the rest of the calendar year in order to pass on the higher crude prices?
Yeah, so we have already taken a price increase in July on a selective basis. But crude has been volatile, and considering the geopolitical tensions, and so there will be this volatility which will go on. Rupee again has depreciated significantly, and we expect it to remain volatile. So considering this, we already put in a price increase, but again, we'll kind of play it by the ear. We'll see how the volumes are coming through, because our focus is volume growth, and we will see how we can again maximize the gross profit pool. But we are investing in brands. If you see versus last year, the investment in advertisement has been more. Across categories, we have invested this time on above the line advertising. We are investing in trade, we are investing in transforming retail channel. So all those will pay off in future.
All right. Rashmi Joshi, pleasure speaking with you. Thank you very much for joining us with all those details on your numbers.
Thank you.
Okay, let's shift focus from corporates back to the markets, and they've not given up gains actually. Seem to dip a bit, but not by much at all. Still up about 0.2% for the Nifty and 0.5% for the mid-caps. Mid-caps is a strong point today. On that note, let's invite our technical experts again. Ashwini Gujral, Mitesh Thakkar have joined us. In a bit, some more experts will join. Ashwini, what is the trade on the Nifty actually? It's moved in such a narrow range.
See, the trade is positive, and like I was saying that yesterday Bank Nifty had a narrow day, today again narrow day. So, it looks like it's pausing before a resumption of trend. So it would pay to take long positions now, particularly in the strongest part of the Bank Nifty, which is the corporate lender. So today you have a situation where PSU and private banks are moving higher. So that way, I don't think Bank Nifty is likely to fall, before the RBI policy, and it would pay if it's a status quo expected type of policy. Chances are it will see short covering, because since yesterday there has been some profit booking on Bank Nifty, and that profit booking hasn't led to a great downside. That indicates strength. Overall, today is a broader market day, but Nifty, Bank Nifty, both on minor declines can be bought, because today, the sectoral thing is looking very good. Hardly you have one sector which is in the negative, rest all are in the positive. That's often a recipe for upside, not for downside. So SBI is a buy with a stop of 292, target of 310. Canara Bank is a buy with a stop of 282, target of 296. And ICICI Bank is a buy with a stop of 300, target of 315.
Okay,
all
well,
corporate lenders.
Yeah, okay, all right, all corporate lenders. Well, Dabur has hit a new high once again today, so that's picking up quite a bit of pace actually in the broader markets. Mitesh Thakkar is also with us. Mitesh, what stocks would you be looking to trade now?
I have two buy calls again from the broader market. The ONGC can be also counted as an index heavyweight. I think after a long time, it seems like it will participate on the upside. That's a buy with a stop at 163 for a first target of 172. And BEML, we had a buy call on BEL in the morning. I think BEML is also now showing upside continuation. So buy with a stop at 900, look for target close to about 1,000.
Okay. Well, just looking at stock moves, I mean, quite powerful. BEML, is there a trade, Ashwini?
See, BEML, BEL, a lot of these guys which have fallen, 70–80%, all are looking good for upside, and that is where even if the market starts to move sideways, these are the guys which can carry the day for the bulls. I think 200 DMA is 1250, so a rally all the way up to that zone is possible. So that way it seems to have bottomed out.
Okay, thanks guys for that. Sandeep Wagle is also here with us in the studio. Sandeep, hi, good morning. It's looking pretty good actually for the markets, especially the mid caps. Would you trade anything now?
Good morning, Sonia. I would go with a buy in a KPIT. I am seeing some strength in that. Stop loss of 300, target 315. On the short side, I have got one call which is a Reliance Capital. I see weakness. Sell it with a stop loss of 408 for a target of 381.
Okay, thank you very much, Sandeep, for giving us your trading strategies. Market still in a strong spot, and we are in the midst of result season. So we have decided to present you a wrap of all the sectors where all companies have reported. Now, in IT, all the big companies, that's the Nifty companies, have reported their Q1 numbers. And here is Rima to take us through the key trends from the sector itself. Rima, take it away. What are the key trends?
Well, first, let me start by saying the TCS was the only one where it was a comprehensive beat and pretty high expectations. Tech Mahindra too beat expectations, but then the expectations itself were fairly subdued and the stock had underperformed in the run-up to the numbers. The other numbers, the HCL Technology, Infosys, as well as Wipro, had fairly pedestrian numbers. So Infosys and HCL Technology missed on revenues, while Wipro margins were on the weaker side. One of the key trend was the fact that the margin benefit due to rupee depreciation did not quite show up. So there was no positive surprise on the margin front on the back of the rupee depreciation. So that was a bit disappointing. US BFSI commentary seems to have improved as well as the performance. On manufacturing, except Tech Mahindra, which had a strong quarter, the other companies reported slightly weaker manufacturing performance, and there seems to be a pickup in order wins, especially for Infosys, TCS, and HCL Technology. Now, when you put all of them together, it's clearly TCS, which is in pole position with a quarter-on-quarter revenue growth of 4.1% and 9.3% on a year-on-year basis. Even on the margin front, it's TCS, which has the leadership position with margins of close to about 25%. Tech Mahindra margins continue to remain the weakest, down at 13%. Some of the key important trends or notable factors in the numbers for TCS, after many quarters, BFSI is fired for them. BFSI delivered a 3.7% revenue growth and the commentary was optimistic. For Infosys, the BFSI performance was disappointing, but the commentary was optimistic because the company indicated that 40% of the deal wins actually came in from the financial sector. For Tech Mahindra, BFSI was strong, manufacturing was strong, but telecom was weak. Again, that said, the order wins in the telecom vertical in the month of July showed some promise. Order wins of close to about $200 million. For Wipro, it was a weak set, particularly weakness seen in healthcare and manufacturing. And for HCL Technology, infrastructure continues to remain the sore point. But the company's recorded the highest ever deal wins, so the street is optimistic that the performance will improve going ahead.
Okay, Rima, thanks a lot for that. Well, that's the scorecard of the IT sector. But let's get back to the here and the now. The Fed Reserve will announce its decision on interest rates later today. What should we expect? Any more rate hikes coming through? Steve Leesman is here with a preview of what we're likely to hear from the US Central Bank as he takes us through their latest Fed survey.
As the Fed holds its two-day meeting, here are the results of the CNBC Fed survey. 100% not looking for a rate hike this week, but 90% say one is coming in September, and 4 rate hikes, as in 2 more from now, 1 in September, 1 in December, pretty well dialed in. You can see the average rate hike from our 42 respondents, 3.7. As for next year, 2.5. 2 is baked in, and the debate is whether or not there is a third. Importantly, 53% say the Fed will go above neutral in its rate hikes. That is, act explicitly to slow the economy. Looking at the stock outlook, you can see that they're back a little bit more bullish than they had. The forecast for the S&P 500 has come down repeatedly through the year, and now the last couple surveys, it's ticked back up. Modest gains expected from the recent close, but still gains nonetheless. You can see in the next chart that it comes amid higher interest rates, or expected higher interest rates, from 3% seen going up to just 3.2 at the end of this year, and 3.5 for the 10-year benchmark Treasury note by the end of next year. Now, a big controversy here was, should President Trump be talking about the Federal Reserve? 83% of our respondents, they include economists, fund managers, and strategists, they say it is inappropriate for the Fed to comment on monetary policy. 15% say it is acceptable. Now, does it have any effect on the Federal Reserve? Well, not very much. 78% say the Federal Reserve will not be influenced by comments from the president, and only a few say it will have an effect either way on rates. So the expectation here is, despite comments from President Trump, that the Federal Reserve will maintain the independence of its monetary policy.
Okay, well, since at the moment it's not going to have any fireworks, 100% seeing no rate hike, I guess the markets are not going to be too excited tomorrow morning when the Fed results, Fed meeting results will be known. We'll take a break on that note. We are coming back and our corporate results analysis continues. We will be joined by Mr. M.R. Jaishankar, Chairman Managing Director of Brigade Enterprise.